Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im Zuhörermodus.
Hello, everyone. This is Aneta Ochinkaretic speaking, Managing Director of BAI. I'm welcoming you to today's webinar. It's about the new landscape of commercial aviation. I'm delighted to welcome John Morabito, Managing Director of EnTrust Global. So as many of you are aware, we are facing kind of a reset of the airline industry. There are a lot of things going on. I mean, short term, it's a disaster, of course, because hardly anyone is traveling anymore. And so there are huge challenges throughout the airline industry and throughout the airlines. But I think John will be focusing more on mid and long term, also commenting on macro influences on aviation. And there it becomes more interesting because it's less depressive. So I think there's still a route to go, and there are good good opportunities to find for investments. And with this, I would like to hand over to John. But sorry, I forgot. Before I do so, let me just outline. There will be just another webinar tomorrow. Here we go. It's on trade finance. I think this is also going to be a very interesting webinar, because many people are maybe less familiar with trade finance, but it's also a very interesting topic and a very interesting investment case. So potentially we will hear you again tomorrow. And now with this, I hand over to John. Thanks, John.
Thank you, Annette. I appreciate it. Welcome, everyone. I hope everyone is doing well, given the current market and environment. I'm pleased to join the webinar today and give an overview of commercial aviation, a little bit about my background, and I'll be going through the slides that hopefully everyone can see on the screen. So just starting with myself, just to frame my background, I started with CIT Group in New York in 2001, really grew up in the world of transportation finance. When I joined CIT, it was really comprised the transportation division of a rail leasing business and a commercial aviation business. On the commercial aviation side, what was very interesting was that we had just really stepped up to the big boys table in terms of ordering aircraft directly from Airbus and Boeing. One of my main responsibilities when I joined was to analyze essentially these new order agreements with Airbus and Boeing, to look at the economics, and then 6 months later 9/11 happened, and 9/11 obviously had a big impact on the aviation industry and the economy. It opened my eyes quite a bit to opportunistic relative value investing. It's a style of investing that I've really embraced throughout my career, and what that means is that in my opinion, the right way to invest in aviation is to look at investment opportunities throughout the capital structure of an aircraft, whether it be senior debt, junior debt, or operating lease equity. And that style of investing, in my opinion, relative value, makes most sense in times of dislocation. And so the blueprint that we had started to embrace at CIT during 9/11 was something that really followed through during the global financial crisis, and I'll speak a little bit about it as I go through the presentation. It really is what we're embodying in our style of investing at EnTrust. EnTrust, as you can see on the slide, is a large alternative investment manager with nearly $20 billion under management. The headquarters is in New York. We have a large presence in London as well. I joined the firm about 2 years ago to help build a division that's been growing under the umbrella of real assets and private debt. I'm joined with a team of people that previously worked with me at CIT, and we've just launched our fund, fortunately, in Q2. So everything that we're doing with respect to aviation is all post-COVID. We have the benefit of not having any legacy exposures that require restructuring. 100% of our time is on evaluating new business opportunities. If I turn to the next slide, what I wanted to do with everyone on the call is touch on a little bit about what the commercial aviation industry looks like pre-COVID, and then talk about the dramatic impact of COVID and what I think the medium and long-term opportunities will be. So as you can see on the slide, really globally, commercial aviation has been vitally important to many countries around the world. From an economic standpoint, job creation, impact to GDP, you can really see on the two quadrants on the left some of the data surrounding that. If you look at some of the regional impact that aviation has to employment and GDP in the bottom left, it's quite substantial. And as I go through the deck, what I'll highlight is why that is important to how the airline industry is going to reset, and how certain airlines within certain industry, within certain countries, are going to really be too big to fail and are systemically important. And that's really evidenced with a lot of the government support that's been provided to date. At the same time, if you look at the right portion of the slide, this is a very large industry. There's almost 30,000 commercial jets in operation, coming into COVID. And it's an industry that requires a significant amount of capital. And as I go through the deck, part of the opportunity is to recognize that the incumbent capital providers, chiefly the banks that lend to aviation and the lessors that lease airplanes, are under a tremendous amount of pressure. And in times like these, that requires new capital providers, ideally capital providers that are experienced in the industry and the asset class, to come in and fill that void as the industry recovers. If you look at the slide on the screen, it's also important to talk about some of the historical context of the commercial aviation industry. This is an industry that over the last 50 years has been defined by growth, really in two aspects. One is the growth of aviation travel, the amount of people around the world which have continued to travel year after year, which has been driven by an expanding global middle class. I'll talk a little bit more about that as we go through the deck. And second, if you look at the bottom right, has been the expansion of the operating lease segment. So if you go back to the mid-1970s, the operating lease product really just got started. Back then, most airlines owned their assets outright, but it wasn't really ideal for the airlines because most of the airlines were weaker credits. Their ability to attract capital was more expensive. And so there was the birth of the operating lease, and it's grown quite dramatically in the last 50 years, comprising almost 50% market share today. The other thing that's important to note is that from a historical context, if you look at the chart on the bottom left, commercial aviation has gone through quite a few market shock events. In the last 50 years, there's been everything from oil crises to geopolitical events like wars. There's been other pandemics like SARS, obviously 9/11 and the financial crisis. The orange line on that graph depicts air travel demand. So over time, what commercial aviation has proven is to have a reversion to the mean in respect of travel demand. I'll go through the deck. This time around, given COVID, we expect the return to the mean to take longer than it has in the past, roughly 3 to 4 years to come back to what we deem to be normalcy. The other thing that's important to note, and I'll touch upon this as we go through the deck, is that the barometer for health within this industry at a high level is always a function of supply and demand. So as the pandemic hit, we realized a dramatic fall off in travel. Now, the airlines had built fleets to try and sustain a travel environment that they thought was going to be much more robust than exists. So airlines around the world right now have an oversupply of airplanes. They have too much capacity. The industry needs to figure out how to deal with that. You're starting to see the forces of supply reconcile itself, and you're seeing that through a few different ways. The manufacturers are slowing production. Airlines and leasing companies themselves are delaying or canceling orders outright. And then you're going to see a number of aircraft, in particular older, out of production aircraft that never return to service. So there's going to be these forces at play to try and move the demand environment back into equilibrium with supply to get the industry back into health. And we're confident that that will happen. I'll explain why. So let me give you a little bit of an overview of how we see the industry reset happening. And one of the things I try and point to is the analogy of what happened in the United States airline industry over time. And this is really relevant to what I think is going to transpire as the airline industry reemerges. For a variety of reasons, we don't think the industry ever goes away. Air travel is going to remain. It's just a question of how it comes out of the current crisis. And so if you look at how the US airline industry looked pre-1978, it was a regulated environment. The airlines were profitable. You didn't have stories of restructurings or bankruptcies like many folks realize is sometimes the opinion of airlines given the weakness of the business model. In 1978 in the US, they instituted deregulation. Competition ensued, and there's the stories that many folks are familiar with, which was that airlines went through restructuring bankruptcy, Chapter 7 liquidation bankruptcy, and that basically was the case up through 9/11, up until the US airline industry consolidated. When the US airline industry consolidated, there were 4 major players in the US that dominated travel. And those airlines over the last decade basically realized historic profitability, were rated investment grade, which is quite unusual for airlines. And if you compare that to how, as an example, the airline industry looked in places like Europe or Southeast Asia, it was quite different because the competition was much more fierce. So in more of a positive, somewhat perverse way, what we think the pandemic is going to create is a rationalization to the global airline industry, akin to what happened in the US throughout its history. And what that means is that there's going to be defined survivors and there's going to be defined losers. In fact, there's probably going to be quite a significant amount of smaller, more peripheral airlines that are not critical to the countries that they operate within that are going to go away. Those airlines that do survive are going to come out the other side in a much more dominant position because for a period of time, the competition that they once had is not going to be there. So we do believe that this is going to happen. We spent an inordinate amount of time analyzing the airline universe. We've analyzed over 350 airlines. We have a view on which airlines are going to survive and why, and which aren't. And that obviously influences our investment philosophy going forward. So let me talk a little bit about the dislocation that COVID has created. I mean, it's quite dramatic and unprecedented. If you look at the capacity, essentially the fleets of airlines that are operating, it's down quite significantly. You know, in some cases, almost 90% in terms of aircraft that are operating. Of those aircraft that have operated, some of them are flying half empty. The TSA screenings as a proxy for travel in the US really fell off a cliff and are also down quite a bit. And I think most powerfully, if you take a look at the graph on the bottom right, you can see over time, based upon the growth that has transpired in the aviation industry, how the fleet grew. This is the line in blue, which grew, to over 20,000 aircraft recently. And you can see the amount of those aircraft that have now been parked due to the drop in travel demand. And if you follow that blue line back to the left, you're essentially at an equivalent fleet size of where we were in the early 1990s. Again, we view that as being temporary, but we also view it as being an instrumental point of how the industry needs to restructure itself. And I'll go through that in a little more detail in some of the slides ahead. If you compare, which many people like to do, the industry downturn relative to some of the previous market shock events, it's 6 to 7 times more impactful from the severity of travel demand and how long we think it's going to take to return. I had mentioned, if you look at the chart on the right side of the slide, we analyzed 357 airlines. The reality is that even pre-COVID, generally speaking, the airline business model is fairly weak, and global profitability of the airline industry was really dominated by roughly 30 airlines around the world. And so we do expect there to be, as I had mentioned, a significant amount of airlines that go away or need to restructure. And overall, we believe that's going to make the airline industry stronger going forward. So there's obviously risks in investing in something like this. There's obligor risk about, will the airline make it and why? There's asset and collateral risk. Are you investing in collateral that has a long-term future ahead of it, or are the residual values going to be cut short because those aircraft are more likely to exit the industry? But there's also opportunities. And in my 20-year career investing in aviation, I've never seen the opportunity set as large as it is now. There's a multi-year opportunity set. It's born out of, as I had mentioned, the incumbent capital moving to the sidelines. For investors that are looking to achieve interesting relative value senior debt returns, all the way through more opportunistic returns in secondary market paper that we believe is going to continue to trade at sizable discounts, and also acquiring aircraft at the cheapest levels that they've really ever traded at. This is going to be a multi-year opportunity to do that. So we're in a lot of ways excited about that. As I mentioned, we're confident the airline industry is not going to go away. It's been critical to global economic growth, travel. There's a huge social impact and benefit to people being able to move and see different cultures, different people. There's a statistic there that over 250 million people currently live outside their country of birth. Middle class has continued to expand. We expect that to continue, driven by developing countries like China and India. As people move up sort of the economic ladder, they want to travel, they want to move around. We also believe that there's a human propensity to want to travel. We do not think that Zoom calls are going to completely replace both leisure and business travel. We think that'll come back in due course. In all of our investments, we look at a variety of scenarios. Obviously, that can play out. There's still uncertainty in the market. Everyone's keeping an eye on the winter to determine whether or not there's a second wave or spike in COVID. How is that going to impact travel restrictions and ultimately travel demand? You can see here there's 3 basic scenarios that we look at. These are frequently updated as we get more and more information. In our base case, just to give a sense of how we're looking at it, we don't expect travel demand to return to 2019 levels until Q1 or Q2 of 2022. We also, in all the investments that we look at, run severe cases, in which case travel never really returns to where it was. There is a complete new normal. For one reason or another, COVID isn't able to be under control, but nevertheless, people travel under a new paradigm. And then there's obviously an upside case, which we don't count on, but there could be a scenario where there is success with a vaccine or therapeutics, and that helps inject confidence into the market, sooner rather than later. I mentioned earlier that there are forces at play right now trying to rationalize supply of airplanes to the new paradigm of demand. And there's a number of aircraft that are going to move out of supply. And you can see some of those highlighted in the bottom right. The 747, which was really the crown jewel of Boeing's fleet, is retiring. The 767, 757, A340, these are all large airplanes. So the way to think about supply is think about seats that an airline offers the market. These airplanes have a lot of seats. They're all being ripped out of supply. Emirates, as the largest customer for the A380, again, a massive airplane with a lot of seats, has indicated that it's not a key part of its fleet going forward. So it's likely to see that airplane retire. Airbus has announced that that aircraft is out of production, and so therefore, you're going to see that airplane, be retired as well. And then you have thousands of older airplanes that are less fuel efficient, less operationally efficient, and we expect those to not, in good part, not to return to service. And this is going to help, again, return this industry to health from a supply-demand equilibrium over time. Not going to happen overnight, but over the next several years, it will rationalize itself. We also look back at the impact, the psychology of travel post 9/11. If folks remember, it was quite unusual to travel after 9/11 and get used to removing your shoes, putting liquids into plastic bags, but it became the new normal. We expect there to be, similar things that we need to get used to coming out of the pandemic, whether that includes masks or temperature readings. There's likely to be things instituted that help this industry be more resilient to the next pandemic. And if you think about the measures that were taken post 9/11, the airline industry has been more resilient to terrorist activity, which is a good thing. The industry has become stronger. So we hope that that's the case and expect that to be the case as the airline industry comes through the pandemic. We do think, again, that there's a huge propensity for humans to travel. So we think that that's likely to come back pretty quickly as things get under control. We've put together some data here just on how large certain countries are, what their per capita travel is relative to, as an example, the US. So there's a lot of room still for growth, we think, within this industry. So what's the opportunity set? As I had mentioned, we really believe in the relative value approach. So we have seen more pipeline opportunities in the last couple of months than we have in the past by quite a large multiplier. We've probably seen some weeks, $1 billion of opportunity a week for new business. What we basically do as a team is we look across the relative value spectrum to determine what do we think really is the best opportunity to invest capital given the market. How is it going to play out? How early are we? What are the right types of investments to make today? What are the right types of investments to make 6 months from now and 12 months from now? But in all cases, as you can see in the chart highlighted on the right, the implied yields or IRRs that you can now achieve are 3 to 5 times what they were just 6 to 7 months ago. So the industry is trading as it should, cheaper than it really ever has. That includes new airplane sale-leasebacks, brand new loan originations that either are loans to leasing companies or to airlines, the secondary market investments, which are aircraft-backed bonds known as EETCs, a large world of securitization paper, which we expect to continue to trade at opportunistic levels, and the capital structure of both leasing companies and airlines. So there's obviously a balance that needs to be done between the headline news and the fact that the industry is under pressure, but at the same time, that really usually indicates that it's an opportune time to invest. And so I mentioned earlier, we're excited because we've put together a team of people that have really grown up in the industry, been through these dislocation events before, and implemented a similar blueprint style of investing in prior dislocation events. The state aid, so far has been substantial. So one of the key metrics we look at when underwriting an airline to understand its survivability is its attachment point to a country and how important it is. And is there a likelihood that that country, for one reason or another, would not stand behind it? So those airlines that check that box rise to the top in our analysis. And basically one of the last slides here that I'll leave you with is that this industry is fractured right now. And what that means is, obviously on the left side, the airlines are under pressure. The airline industry itself will go through the reset that I had tried to articulate, and the incumbent players are impacted. And that includes the leasing companies and the aviation banks. And we're starting to see their restructuring process take place. And I'll give you an example. And I actually think this is fascinating. In the US, there's a part of the bankruptcy code called Chapter 11. And Chapter 11 is an in-court restructuring process that allows a company to restructure itself. Any airline or company that has a nexus to the US can file for Chapter 11 protection. And we're starting to see that happen with some of the Latin American carriers. LATAM, which is the 14th largest airline in the world, filed a few months ago for Chapter 11 protection. Aeromexico has done the same, Avianca. And in that process, those airlines are allowed essentially to recalibrate themselves. What aircraft within their fleet do they think are no longer necessary? What contracts do they have that they want to reject to better optimize the company going forward? Do they want to renegotiate labor? And when they do that, they provide, in my opinion, a good chance for the airline to get through COVID and come out the other side stronger, because they're now going to essentially fix the airline so that it matches the new demand environment. But second, when they do that and when they shed aircraft, whether it be aircraft loans or aircraft leases, that creates a bit of a shockwave that flows out to these incumbent capital providers, whether they be banks or leasing companies. So as these dominoes start to fall over and the airline industry tries to figure out ways to restructure itself, the traditional incumbent players are going to have more and more pain. And that'll present opportunities for us, whether it be to purchase loans from banks that become spooked or that have growing problem loan businesses. We always believed in our thesis, even before COVID, that there was a large opportunity to gain market share from banks because they're under a number of constraints. I believe that to be amplified quite significantly for the next few years now. And so overall, I guess there's quite a bit of dislocation in the market. You have to really understand how to navigate it, but it's unequivocal that the opportunity set is quite sizable. So we are happy to answer questions. If anyone has questions that they want to ask, please feel free to do so. And I'll just mention that, on the call is my colleague Lars Zimmerman, based in our London office. Lars covers Germany and Austria, and is fluent speaker in German. If anyone wants to follow up with him, I've left his details here. So thank you everyone for the time, and be happy to address any questions.
Great. So thanks. Just waiting for the camera. Hi, John. So thanks, John, for this presentation and for sharing these insights on what's going on in the aviation industry. I think it has been extremely interesting, and well, of course, there are a lot of things and questions still open, and we will see what the future is going to look like. Saying this, maybe just to address a few questions. So how will restructuring activity influence the investment opportunity set? Is this something you can kindly comment on? Sure. Yeah, I highlighted it a little bit at the end. I think the restructuring activity is critical because the industry is going to reset itself, both in terms of airlines trying to determine what the right business model is for them going forward, if they can survive. And the incumbent capital providers are going to need to figure out whether they need to restructure themselves. And so you've started to see airlines either go bankrupt
or file for in-court or out-of-court restructurings. But at the same time, that also may impact banks themselves or leasing companies. And that's going to provide opportunities for us to try and acquire some of those positions at what we think are good prices. And as more of that restructuring activity takes place, it will be an indication that the industry is starting to recover, especially with the airline side.
Okay, thank you. And how do you envision their opportunities set for debt and lease equity?
Sure. So we look at investing capital in one mandate specific to senior secured debt. We've seen this of interest to a number of different insurance companies who are looking to achieve yield in structures that are today risk averse. A lot of the bargaining power across the board has really shifted to the lender, just because a lot of the banks, more so than I've ever seen, have retreated to the sideline. So the opportunity set, I see on the debt side is massive. Multi-billion-dollar opportunity over the next 3 years, really being able to pick the places that you want in terms of collateral, in terms of credit, in terms of structure. On the lease equity side, we also think that the next 3 years are going to be transformational. So if you think about it through the lens of, at the end of the day, we're going to own airplanes. Well, in the next 3 years, I believe we're going to have the opportunity to own airplanes at the cheapest levels that they've ever traded. But I would say that initially we're probably going to be more focused on debt. And then as the industry recovers a bit more, we have a little bit more certainty on how things are playing out, we'll start investing more on the lease equity side.
Okay, and talking about that, I mean, what terms do you expect and loan agreements as being the most familiar with them?
Yeah, so I would say, a lot of the deals that we're looking at with the top tier credits would have been, just to give a comparison, it would have been, 75 to 85% loan to values pre-COVID. And you were probably talking about, margins in the 100 to 200 range. Today, you're probably able to get 50 to 60% loan to values based on lower values, right? Because the current market value of the collateral has fallen. And you're looking at being able to get, probably 2 times or more the margin you were able to achieve pre-COVID. A lot of the lending that we do also is to leasing companies. We like that because the leasing companies have real equity behind us. So that creates a nice structural second layer of defense where if something does happen with the airline, our actual borrower is a leasing company who, historically, in my experience doing this, tends to look to cure or repay the loan, so they don't have to be foreclosed upon. And then on the lease equity side, we've seen opportunities at top tier credits who are looking, the airlines are looking to sale lease back airplanes to raise liquidity, and they're offering lease terms that I would say are significantly better than what existed pre-COVID.
Okay, and in terms of duration, or how many years do you usually see for those loans?
Really varies. It really looks to match usually on the lease deals anywhere from 3 to 12 years. I would say on average, you're probably looking at around 7 years on the loans. For a lot of the insurance companies in particular, who we've spoken to about aviation debt, they've looked at longer term, really a hold to maturity view. So for that, we're happy to generate loans anywhere from 10 to 15 years. Really just depends on the transaction.
Okay, and this also leads, I guess, to the final question, and that is, can long-term investors benefit from the current market environment, and if so, how?
Yeah, I mean, I personally think this is the biggest opportunity really ever in aviation. So I think that investors that are able to grapple with and get comfortable with the dynamic, and hopefully some of what I share today helps people think about that. there is going to be quite a significant opportunity to realize a good relative value return. And again, our style of investing is not necessarily to try and find the places where we can hit home runs. Our style of investing is to think about where's the best risk-adjusted return. And for investors that are looking for that, I think there's a substantial opportunity to make long-term returns. How? It's going to be through providing senior debt, acquiring secondary market paper that trades at a discount, and participating in the restructuring activity of both banks, leasing companies, and airlines to provide, liquidity solutions, whether that's purchase airplanes because they need to sell certain airplanes outright. There's a huge opportunity set that we think will play out in the next 3 years.
Okay, thanks, John. I think that's it for today. There are no other questions. Thanks a lot. And yeah, everyone else, hope to listen or hope to meet you again in one of our webinars, potentially tomorrow for trade financing. Yeah, have a great day. Bye-bye.
Bye-bye.